Robotics is the next big tech investment for many retail investors, but it's hitting every area of the market. MarketBeat's Chris Markoch joins us with a list of 3 robotic stocks that are really shaking up the healthcare sector. Chris, I'm excited about this discussion today, kind of narrowing in on areas where robotics are really being developed right now, and this is a big area. These names are names we haven't talked about for a while on the show, so I'm excited to get into the list. First, I want to talk about the big robotics discussion that just happened in the market. And that was the Tesla earnings report. The stock kind of pulling back this week, but I think there was some different developments on their Optimus and on robots in general. This seems to be such a hot area for investors.
Yeah. So, Tesla reported earnings Wednesday night, the 28th, and after the market closed. And the buzz about the earnings report, and it will continue to be for the next several quarters for Tesla, is the build out of their humanoid robots named Optimus. And that's an exciting area. It's one of the things that investors first think about when they think about robotics. That's not what I was looking at today, especially when you're looking at the field of healthcare. Investors are warming up to the idea of how robotics can be used in healthcare. The businesses that we're going to talk about today have established revenue streams. They've got business models that are allowing them to have recurring revenue, and they also have technology moats that are really hard for competitors to replicate.
I think that's a really important distinction. A lot of the videos we've done on robotics on this channel that a lot of you have loved and watched have all talked about AI in the body of something, and that's what robotics is. It's kind of taking AI into a physical form. Well, that's true in healthcare, but it does look a little different, and that's where these companies kind of have unique trends and kind of, like you said, niche in the market on healthcare and how their technology is really helping to move AI into healthcare in the form of robotics in some way. So we're going to get right into this list today. The first one is a name we have talked about on the show before. It's a popular name with investors, and I'm excited to get an update on where the stock has been over the last year.
First one's Intuitive Surgical. Ticker symbol is ISRG. The thing with Intuitive Surgical is they're the undisputed leader in robotic-assisted surgery. Even if investors aren't necessarily familiar with the idea of surgical robots, they may have heard of the Da Vinci system. That's Intuitive Surgical's proprietary system. It's considered the gold standard. It's being installed in many hospitals around the world. Here's what makes the story a compelling investment story. Intuitive Surgical operates on what is called a razor and blade model. So they sell the Da Vinci system into hospitals. Now, those are expensive capital purchases, but they're one-time purchases. So it's a nice hit to revenue, but it's a one-time event. How Intuitive Surgical makes the real money is that they have recurring revenue that comes from every single procedure. Every time a surgeon uses a Da Vinci system, Intuitive Surgical is selling the hospital the instruments, the accessories, they provide the service contracts. And then as procedure volumes increase, business increases for Intuitive Surgical and margins expand. That means profits expand. And that's something that investors love to hear.
Yeah, absolutely. It's why we've heard this name before, because they're really on the front end of surgical robotics. Absolutely. But let's look at the stock details a little bit. I think the last time we talked about this stock on the channel was almost a year ago, and we were expecting a lot of growth. And we have seen that in the stock. But recently, there has been a little bit of pullback or maybe wavering in the stock price.
Yeah, this has been one of those stocks. If you look at it over a long period of time, like over the last 5 years per se, the stock's up over 100% in the last 5 years, but it's been a choppy ride up to that point. In the last 12 months alone, this has been a rocky ride. But overall, the trend has been very positive for Intuitive Surgical.
I think I want to hear a little bit more about what analysts have to say too, but I think another thing that's interesting about this one is a lot of investors are interested in investing in robotics because it's on the up-and-coming cusp of really this industry really taking off. It's still early for robotics, in other words. Is it still early for Intuitive Surgical?
I think so. And so one area that I'd point to, Bridget, is investors might look at this and they might see Intuitive Surgical and say, well, wait a second. They've got a price to earnings ratio of like 64 times, I believe it is right now, as we're taping this video. That's too expensive. But you have to understand what you're paying for. Intuitive Surgical isn't doing a cyclical business. It's not a commodity. You're paying for a company that's in a dominant market position. They've got recurring revenue coming in with expanded margins.
Yeah, I think that's a good discussion about where this company could be headed and how long it might take. Let's talk about, real quick before we move on,
Sure.
what are analysts saying? And have we seen those trends change at all recently about how soon this company could maybe take off even more and how much growth we could expect ahead?
Let's go back to where we started, Bridget. Stock's down about 11.5% in the last year. But analysts' consensus price target on the stock, as we're taping this today, is at $620.41. That's up over 22.5% upside. But if you dig into the details further, you see that there are several analysts that have a price target well above that $620. I'm looking right now and I see Barclays came in just this week with they upgraded their price target to $712. There's a lot of analysts that are very bullish on this stock right now. And again, these are 12-month price targets, but if you take a $620 price target and you say that could be $720, there's a lot of upside here.
Yeah, you make a good case for the future of this company. I do think one other thing that I noticed in the stats looking at Intuitive Surgical, it's also important to note that there is 83% ownership by institutions on this one,
Yep.
and then less than 2% short interest. So those are also interesting stats that show that this is a really solid company that a lot of investors believe there's a strong future ahead. So it's not like some of those smaller pre-revenue robotics companies we've talked about on the channel before. This one's pretty solid, and the next name, a big competitor, is going to be similar story. If you're looking for more of those up and coming, maybe riskier robotics plays, make sure to check out our recent article just for our YouTube viewers on MarketBeat.com. It's a list of 5 robotic stocks that are catching momentum right now, but are still pretty early. You can scan the QR code, or I'll drop that link in the description and in the comments if you want to take a look at that article on your own too and look at some other robotic stocks in other industries. But Chris, let's move on to the second stock on your list. And this is another big competitor for Intuitive Surgical.
It is. The name is Medtronic. Ticker symbol is MDT. This is another stock that many investors will be familiar with. The thing that we have to talk about with Medtronic is they're not a pure play in robotic assisted surgery. Medtronic is diversified across a lot of categories, such as cardiac devices, diabetes management, neuroscience, but they do have a product called their Hugo system that is the direct competitor to Intuitive's Da Vinci system. So Hugo is a modular, portable robotic surgery platform. It's designed to make robotic surgery a little bit more accessible and flexible. Da Vinci is a sort of a standalone, stand-in-place system. So Hugo is that idea of it's more modular. The challenge that Medtronic has is Intuitive has had a big lead. They're fairly well entrenched in here, but Medtronic is trying to kind of eat into that market. And they're a $100 billion company. They've got deep relationships with hospitals and regulatory expertise. So they can play the long game here. And that's where an opportunity may exist for investors.
Yeah, interesting.
Yeah.
How is this one really different from Intuitive Surgical, or is their growth story going to be somewhat similar?
The big advantage and possibly differentiator between Medtronic and Intuitive Surgical is the diversification angle here. Hospitals that are already buying things like cardiac devices, neurostimulators, or diabetes technology from Medtronic, they may be more willing to go and try the Hugo system because of those existing relationships. And then Medtronic, on their end, they can bundle their services. So that may make Hugo more attractive from a total cost benefit standpoint for the hospitals. That would be the biggest way that they're different. Again, they're not a pure play on robotics, but that could work to their advantage in certain situations.
Yeah, and we're going to get into what that's meant for their stock price
Right.
and what analysts have to say too. But I do have a couple more follow-up questions on just the company's future too. I think it's kind of a question for Intuitive Surgical and this one because they're such similar types of robotics
Right.
in healthcare companies. Is there research and development happening with both of these companies? Could there be future products, future types of robotic surgeries that they're currently working on within these companies that could be big catalysts in the future for either of them?
My answer to that would be, of course. I think that's something that they're always going to have to keep an eye on is how to keep these systems adaptable to different scenarios. Now, there's some surgeries that they're probably going to have a harder time doing than others, but they've been adapting. So right now they're designed to do surgical assistance. In the future, who knows where these could go?
Yeah, that's a good question, and still a question, it seems. That's still a part of the
Yeah.
future story for both of these stocks, where as we see robotics developing, how could
Yep.
it impact these stocks in the future? I think that's an important question for investors to consider when they're looking at these. Even though they're already solid, profitable companies, there could be some catalysts coming as robotics overall is developed down the road. Let's take a look at Medtronic's chart because it's a somewhat similar story to Intuitive Surgical, too.
Yeah, so the stock's up about 10% in the last year, but if you look at the 5-year chart, it's down about 10% so over that time, whereas we said Intuitive Surgical was up a lot over that time. And I think really that goes to talk about the different risk and reward propositions for each stock. With Intuitive Surgical, you're talking about a company that's really laser focused on robotic surgery. That's their pure play. That's what they're doing. Medtronic is a broader stock. It's more diverse. And the one thing that you see with Medtronic is it shows up in their stock price performance. So it's not going to, you're not going to see a lot of the big swings as much as you do with something like Intuitive Surgical. Also, Medtronic is a company that pays a dividend. Intuitive Surgical does not. The yield's 2.8%, which, okay, that's fine. That's a pretty average yield in the sector. But they've been growing that dividend at about 5% over the last 3 years on an annualized basis. So again, it's a different risk reward profile, but that could be attractive for certain investors.
Yeah, absolutely. I also think it's interesting that a company that's been around for as long as Medtronic is making that shift into robotics. And how much further could this company shift or pivot down the road
Yeah.
into that robotics arm of their company if that's an area where we continue to see a lot of growth and development? So, an interesting stock. Again, more of a solid company, not that risk forward robotics play. I'm interested in the last stock that you have on the list today because it's a little bit of a different area of robotics and healthcare.
Right. And so now we're going back into more of the pure play market. And the company is called Edwards Life Sciences. The ticker symbol is EW. The company is the global leader in structural heart therapies. So the company's signature product is TAVR, which stands for transcatheter aortic valve replacement. It's a minimally invasive procedure. It replaces a diseased aortic valve without using open heart surgery. And instead of breaking open the chest cavity, surgeons can thread a new valve through the patient's femoral artery. And the benefit to the patient, obviously, instead of, without that sort of invasive surgery, is patients can recover in days and not months.
Okay, very interesting. And something maybe some viewers have had experience with before. Again, this is a leader in that field, already operating in many hospitals across the US. Curious to see what the growth trajectory could look like. Is there still a lot of room for growth in this area, or are they already being used in many of the heart surgeries already happening?
That's a great question, Bridget, and I'll answer it two ways. So the first part is, as you can understand, when Edwards Life Sciences first introduced this TAVR, the FDA only approved it for very high-risk patients. But now, as clinical data has come in, they now have expanded their label, as you might say, for TAVR to intermediate risk and even now low-risk patients. So that's been a massive expansion of their total addressable market for that signature product. Now, we can imagine that, again, as we have an aging population, and the cases of this aortic stenosis are increasing, this is a durable, sustainable business model for the company. But that leads to my second point. The company is actually investing in next generation valve platforms that are even easier to implant. They're more durable and they're suitable for even a different range of conditions. So we're seeing that the fact that they understand that they've got to expand beyond the niche that they're in, and they are doing that. So I think that's where investors are excited about the growth to come.
Yeah, absolutely. I think that future growth and
Yeah.
all of the development happening in robotics right now could play a huge role in healthcare companies like this that are working on innovations in robotics and
Yep.
in these kind of robot assisted surgeries and even hardware like this. I don't know what you think, Chris, but I do also think that companies that are already solid, they already are funded, they've got the cash flow they need, are probably the ones that are going to have a better chance of getting to those developments faster than maybe a startup company that's just trying to do something like this from scratch. What are your thoughts on that?
I completely agree with that. And I think that's what makes companies like this more attractive because even when you have some of the startup companies, it will be the companies like Intuitive Surgical or Medtronic or now Edwards Lifesciences that have that balance sheet and the bandwidth where they can maybe even absorb some of those companies, or they could partner with those companies to bring different technologies to market. So yeah,
Yeah, and a very good point with this one. Also, you can see in the chart and the analyst forecast for this one, it's just a solid company. We still have about 22% upside on the consensus. There are some really high estimates for this one, which I think is interesting to see. What do you think of the higher end estimates for this one?
analysts are seeing a lot of the same things that we're talking about right now. Robotics is a hot area, healthcare is a hot area, and these companies are merging those two themes very well. You're talking about an aging demographic in the United States. You're going to be talking about more need for robotic surgeries, and then in the case of Edwards Lifesciences, you're talking about something where there's going to be more need for not only different types of heart procedures, but just heart procedures in general. So I think analysts, they're seeing that this is where the trend is going, and they're seeing that these stocks have much higher to run.
Yeah, I think that's what is making my decision for which one of these to add to Britain's buys a little harder because I think Edwards has a lot of growth potential ahead. I like to see some of those more recent higher analyst upgrades, even though right now it's only showing that 22% upside. But I think for Britain's buys this round, I'm going to add Intuitive Surgical, simply sticking with the leader in the field and also seeing kind of where the pullback is at with Intuitive Surgical right now. I think it's a decent entry point for this stock. And I love to see how bullish analysts still are on Intuitive Surgical's future. So that's going on to Bridget's buys list for this video. If you haven't checked out my watch list, scan the QR code or click the link in the description because it's really fun to follow along with all the stocks we cover on this channel, including all the robotics plays we've been talking about recently.
Yeah.
We talked about some riskier robotics plays with Jeffrey Neal Johnson, talking about some robotic stocks all under $20 right now. If you haven't watched that video yet, take a look.